What's up, guys? Welcome to the Momentum Trading Lab. And in this video, we are going to go through the breaker block, how to identify them, how to use it in your trading. And by the end of this video, you should be able to find setups similar to this based on the breaker block idea. Let's get into it. Okay, we'll start with a visual representation of a bullish breaker block. So a bullish breaker block is the series of up-close candles before price action takes out the sell side liquidity below an old low or relative equal lows and is then followed by a bullish market structure shift. A bullish market structure shift is when we have been trending down and price action takes out the last lower high. And once we have these conditions met, we could expect price action to retrace back into the bullish breaker block for us to frame our long entry idea. Another way to look at it is a bullish breaker is the series of up close candles or up close candle in between the very last two higher lows before the bullish market structure shift. So for a bearish breaker is the series of down close candles or down close candle before price action takes out the buy side liquidity above an old high or relative equal highs and is then followed by a bearish market structure shift. So we can then expect price action to retrace back into the bearish order block to frame our short idea. Another way to look at it is the bearish breaker block is the series of down close candles or down close candle in between the very last two higher lows that we have right here, followed by the bearish market structure shift. Okay, now we'll do a bit of backtesting on the bullish breaker. So what do we have right here? We have a low right here. Price action came up, it created an high and then came back down to take out the sell side liquidity below this low. So the sell side has been taken. So now we need to see a bullish market structure shift to validate these up close candles as a bullish breaker block. So the market structure shift will happen if price action can get above this high. Okay, let's see how this plays out. Okay, so right there we have a bullish market structure shift. So now this area is our bullish breaker block. Move this to the side. And let's see if price action comes back into this block to frame our long entry idea off. It moves to the upside. Will it come back? Right there, it taps into it. So this is where you can go long. Put your stop below this low right here. And then starts to move to the upside. Let's see if it can take out that high at least. And there we go. Okay, now we'll do an example of a bearish breaker block. So right here we had these relative equal highs. So above the relative equal highs, we have buy side liquidity. So price action came into the buy side liquidity. So if it starts to displace to the downside to give us that bearish market structure shift, then we might have a valid bearish breaker block. Okay, so what did the rule say? The rule said it's the series of down close candles or down close candle before price action takes out the buy side liquidity and then shifts into a bearish market structure. So that will be the last down close candle that we had. So let's extend that and let's see how this plays out. So now we want to see the market structure shift and then price action to retrace back into the block and then continue to the downside. Okay, so right there we have the bearish market structure shift, confirming this down close candle as our bearish breaker block. Okay, then it starts to tap back into it, starts to move away, takes out, has not taken out the low yet. Taps back into it one more time and then starts to displace to the downside. That has been my explanation of the bullish and bearish breaker blocks. If you found any value from this video, please consider hitting that like and subscribe. And then I'll see you guys in the next one.